Hi, Keith. Thank you very much for joining us today. This has been a transformational year for Piedmont Lithium, having gone from an explorer code to a developer to a producer in a relatively short period of time. And Piedmont recently released its Q3 earnings, the first earnings in the history of the company. And why don't we just start right there? Give us a highlight of those numbers.
Thanks, Jimmy. It's great to be on with you again. It's always great to talk to you. Yeah, we were all thrilled at Piedmont to have our first quarterly earnings call and to report third quarter revenue for the first time. We had 2 shipments in the quarter. We had gross profit margins over 50% despite declining lithium prices, so we're very excited about that. Positive adjusted earnings per share of 88 cents a share. So it's great to have positive revenue, have positive gross profit and EBITDA, and positive earnings per share in our first quarter. So it's very exciting. We hope to have many more quarters like this and with higher earnings to come.
And as a reminder to our viewers, the production came from Sayona, which is a mine in Quebec, and Piedmont owns 12% of Sayona Mining and 25% of Sayona Quebec, and has an offtake agreement with NAL. Maybe you can just provide some background on that offtake agreement. How many tons does that provide to Piedmont, and what the floor and ceilings are in terms of pricing?
Yes, that's exactly right what you said. We got involved with Sayona a few years ago. We jointly acquired North American Lithium out of receivership. Sayona is the operator. Their team's doing a great job. So we put the asset back into production. As part of the negotiation, at the time, Sayona was looking for a customer for spodumene concentrate. We were looking to acquire spodumene concentrate for our downstream plans in the US. So we came together, we signed an offtake agreement. And essentially, we get the greater of 113,000 tons a year, or half of production, at market prices subject to floors and ceilings. 2023 is a startup year, so we agreed to treat this as a half year. So for 2023, we expect to ship 56,500 tons. And again, we'll buy that material at market prices subject to floors and ceilings. The floor is $500 US a ton, the ceiling is $900 a ton. Our realized price in this quarter was over $1,900. So we essentially acquired the material. And on a grade adjusted basis, the 900 is for 6% spodumene concentrate. We shipped 5.3% concentrate this quarter. So if you do the math, 5.3 divided by 6 times the 900 with some adjustments here and there, you get to our adjusted cost of around $805 a ton. Our selling price averaged $1,624 a ton. Thus the margin. So that's the nature of the deal. It's a life of mine agreement, and hopefully spodumene prices will remain high and it will remain profitable for us.
And remind me again, what is life of mine?
Life of mine is currently about 20 years, although you may have seen drill results out of North American Lithium in the last couple of weeks. It's a very big ore body. And this is an asset that was literally in production underground in the 1950s. So it's been around a long time. It's been worked on by different groups. It was put back into production about 12 years ago by a Lucas Lundin-backed group, actually. And we're just now, really doing the right things with it, investing the right amount of capital to make it operate most efficiently. And we've taken the opportunity with Sayona to really invest in drilling to understand the scale of the opportunity. And it turns out in the last week or two, Sayona announced drill results that are probably the best ever by far for this deposit. So the future could be bright. We think there's an opportunity for considerable resource and hopefully reserve upgrade, both in scale and in quality in terms of grade and thickness. So yeah, that's great news. That will require us to do some work on engineering. What does that mean from a mining perspective? Does that mean alterations to the mine plan down the road? Probably it does, but that's a good thing. And so we're excited about that. I think this is the sort of mine that could go for 50 years quite easily.
And I'm glad you brought up the drilling that's going on. So is this exploration drilling or infill drilling, and what's the purpose of it?
It's both. It's a good question. There was some drilling done by a prior owner that was deeper, that indicated some opportunities kind of at depth, which NAL had never really pursued previously. So that's exploration drilling that's going on. Those results are quite impressive. So they're very exciting. We're also doing a lot of infill drilling within the pit. As we got involved ourselves with Sayona over the last couple of years, we took a couple different looks at the resource model. So a lot of drilling is going on inside the pit shell to really understand, mining priorities, et cetera. And I think there's a lot of inferred resources that we think some of which will have an opportunity to come into the measured and indicated category and be ultimately counted as reserves.
And you mentioned earlier that Sayona started producing in March of this year. It is ramping up. Maybe you can just speak to the ramp up process and when will it be at full capacity?
Yeah, it'll probably be at full capacity middle of next year. I mean, full capacity for the current resource that could change in time with higher grade material, et cetera. Fundamentally, the team's doing a great job. It's a brownfield asset, so it was relatively easy to get started up on the one hand. On the other hand, most of the material, the plant was built 12 or 14 years ago. It's been on care and maintenance. There've been some minor maintenance issues that are being kind of resolved, and there's continual upgrading to go. So they're producing well. Sayona put out guidance a couple weeks ago on kind of fiscal year production. Their fiscal year is June 30th of 140 to 160,000 tons of production. I think they indicated, and our sense is we'll be at full ramp up by the end of that fiscal year. So mid to late next spring, which is great.
Why don't we move on now and discuss Ghana? Piedmont's next project to come online is in partnership with Atlantic Lithium, and the project is located in West Africa, or in the country of Ghana. And Piedmont also owns an offtake agreement with Atlantic Lithium. Maybe you can just provide some details of that offtake agreement and what it means to Piedmont, and maybe how things are progressing within Ghana.
Yeah, things are progressing really well in Ghana. So our offtake agreement there is different. It's similar in that it's basically 50% of the material. It's not the greater of, but it's 50% of material produced. It's at market prices, no floors or ceilings. So it's a market-based offtake agreement. What it does is it gives us 170,000 plus tons a year of spodumene concentrate that we can have committed to us to bring into our downstream plans, principally in the United States. So that's great. Important achievements in Ghana this year were, first of all, there was an announcement in early September. I was in Perth with the team when this was announced, of MIF, the Sovereign Wealth Fund for Ghana, investing in the project. They're investing about 28 million to buy 6% of the project. They'll fund their share of the capex. That's a great endorsement, very important for the project. Separately, the mining lease was granted a couple weeks ago to Atlantic. That needs parliamentary ratification, but we expect that to be forthcoming. So we're now entering the permitting process. It should be relatively straightforward. Ghana is a proven mining country. This is a simple DMS plant. So we hope to be permitted by late 2024 and then start construction and be with production commencing kind of late 2025 and ramping up into 2026. And what I'd highlight here is this is a big project. If you look at Atlantic Lithium's PowerPoint, they characterize this as the 10th biggest spodumene producer in the world, 10th biggest producing spodumene mine in the world by the time it's ramped up in 2026. So that's exciting. We're going to own essentially half of it with some dilution with the government involved, and we'll have half the material. So it's very significant. It should be relatively low capex, relatively low operating costs, just given the nature of the flow sheet. And it's a truly world-class project. Interestingly, we can get material physically from that mine site to our chemical plant site in Tennessee for less money logistically than it would cost to get it from Val-d'Or. That's how attractive kind of the shipping logistics are from the port in Ghana to our site in Tennessee.
Keith, you mentioned Tennessee. Why don't we move the discussion toward your U.S. operations and give us an overview of what's happening in Tennessee? You have all the permits in place. If you wanted, you could start construction very soon, but you're going to hold off. Why?
We really want to put in the most sensible financing package for our shareholders. So this is a big project. The definitive feasibility study showed capex about $800 million. We've done a lot of detailed engineering since then. We spent a lot of money on the right consultants doing the right work. And with just capital cost inflation, it's clear it'll cost some more. We don't know exactly how much more yet, but as we think about funding it, it's a big project. It will be harder to execute, I think, given the history of some of the projects, say in Western Australia, than a spodumene mine will be. So from our perspective, we think it's important to de-risk it technically and financially. So we're applying for an ATVM loan through the Department of Energy's Loan Programs Office. These are the low-cost loans that are put in place for EV businesses and suppliers to EV businesses like us, essentially. We think that could cover somewhere around 70% of the capital. And for the rest of the capital, we're in conversations with potential strategic partners who would like to get involved in the project. We're willing to sell down as much as half of the project, end up owning half. We'd like to own more, but we're happy to own half with the right partner. I would say interest is strong. As you might suspect, we are, it's early days. It'll take several months to bring a process to conclusion, but as you might imagine, a world-class lithium hydroxide plant in the southeastern US benefiting from the IRA in a market where we think we'll need 30 or 40 times more lithium hydroxide in the US than we currently produce just in the next decade. It's really very strategic for people. So the big car companies, the big battery companies, many others are quite interested. And we think we'll have a pretty happy outcome there and really end up with a project that we own half or more of for a relatively small amount of our own capital. We've already invested quite a bit ourselves with the technical execution de-risked considerably. So that's the way we're going to approach it. It's all about preserving shareholder wealth and not putting it at risk.
And when you talk about the announcement of a partnership, when can we expect to see that news? Will that be sometime in 2024?
It could be. It could easily be. I mean, I think the process could move quickly or slowly depending on how we pursue it. I mean, there are parties who are more acutely interested. There are some parties who we think this makes a lot of sense for, who we need to spend more time with. And we're not in a big hurry. I mean, there was this view in the lithium industry for a period that prices are at this extraordinary level. You should move as fast as you can to get into production. I never really bought into that strategy, and I certainly don't today with prices having fallen 70%. So I think what's important is to do it right. This is a 30-year asset. It's important to get the right partner socially, technically, financially, someone who the US government will embrace, obviously, and because that'll help with the funding and to really do it right. We're going to build a big lithium hydroxide business. Tennessee will probably be our first plant. Getting it right is really important to us. So 2024 timeline, sure, that should happen, could happen, but we'll have more news as we know the answer.
All very good points. The last project I want to touch on is Carolina Lithium, which is based in North Carolina. It's at the feasibility stage. Why don't you provide an update on this project?
Yeah, it's a great project. We call it the best located lithium project in the world. It's in North Carolina, 30 miles west of Charlotte on the tin spodumene belt, one of the world's biggest spodumene belts, and where all the lithium in the world was produced from the 1950s to the 1980s, essentially. So it's a great location, surrounded by customers, great labor force, low cost energy, great infrastructure, and importantly, an opportunity to monetize the byproducts from the mining process. Most spodumene pegmatites in the world have other minerals like quartz or feldspar associated with them, but they don't have markets nearby. We're surrounded by consumers for those markets. So that could be a very significant benefit to our cash cost of production on the mining side. So that's a project we're moving forward. We're in the permitting phase. We need a mine permit. We're in the late phases of that. We hope to get that in the first half of next year. We need an air permit for the chemical plant we're going to build. It's an integrated site with a mine and chemical plant on the same site. That's unique. There's nowhere else in the world other than possibly NAL where that's the case. So we need an air permit. We think we get sometime next summer. And then we need to have the property itself rezoned. This is a private land that we own, that we've acquired. It's currently zoned, for the most part, residential or agricultural. It needs to be rezoned for industrial purposes. That's a process that'll follow the mining permit. So it'll all take time, but good things are worth waiting for, and we remain very confident we'll get to the finish line with that project. It's currently slotted to occur after Tennessee, so we'll see how this partnering process goes. Every potential partner we're talking to is also interested in Carolina, as you might imagine, and so we'll see how that all plays out in 2024.
Keith, I want to move on and discuss your balance sheet and also your funding strategy. You have a lot going on, all of which is going to require a lot of capital. How much cash do you currently have on hand, and how will you allocate that cash in the coming year?
The answer to the second question is carefully. So we have about 95 million of cash in the balance sheet. We also own about 85 million in stock in Sayona and Atlantic. Those aren't really held for sale. It's not our plan to sell them, but if we needed money, we could. Those shareholder interests are unrelated to our JV interests and our offtake arrangements. And from a capital perspective, over the next year, we expect to generate operating cash flow through our NAL offtake agreement. We have a gross margin of 50% at these prices, so that's helpful. Most of the money we need to spend, you would expect to spend it, say, in Ghana, in Tennessee, and Carolina, is already spent on the engineering. The DFS is done in Ghana. Most of the remaining spend there will wait for a permit, which is a year away, plus or minus. A lot of work has been done on front-end engineering design at Tennessee. We're not going to do a lot more now while we go through the partnering process. Partners might have their own points of view on things, so we'll preserve capital there. And in Carolina, we're really just spending money on permitting, which isn't that expensive, but also acquiring some of the land still as it comes due. So we feel good about our position. We're fortunate. I mean, the big differentiator I think for us is, of the dozens and dozens and dozens, if not hundreds, of lithium projects and companies out there, we're one of a very small number that has cash flow, and that's a big differentiator. We're a producer with cash flow, and that really lets me sleep easier at night as I think about our cash position.
You'd made mention earlier about how the pullback in lithium prices has impacted your financials. Do you think we've found a level with the lithium price now, or do you think we might be under more pressure?
It's hard to know. I think we're certainly bumping up against the cost curve. I mean, this is a somewhat opaque industry. Maybe it's more than somewhat opaque. It's a young industry. The sources of raw material are, the biggest sources have been Australian spodumene, South American brine. It's been 80% plus of the market. As the market's grown, there've been some African spodumene projects come online. There's been some Chinese lepidolite projects come online. Not everyone has a great handle on what the operating costs of those operations are, but I think it's safe to say that as you think about lithium, and there are really three benchmark products. There's the mineral concentrate, spodumene concentrate that we're selling now, and then there are lithium salts, hydroxide and carbonate. And ultimately, to produce lithium carbonate or hydroxide from lepidolite, lepidolite's another mineral considerably lower grade than spodumene. By definition, operating costs are higher. You got to process a lot more rock to get to the same place. So I think we're bumping up against that cost curve. In our view, I mean, the benchmarks that we've been focused on with our own contracts, with our trading companies selling spodumene, we sort of plateaued here over the last few weeks. And I don't know if that's a false bottom or if that's bottom forming. I don't know, but we don't have a great crystal ball heading into the next year or so. We're happy to have 50% gross margins at these levels. If prices would rebound, not to the historical levels, but if they would rebound, it would be great for us, obviously. Our costs are relatively fixed. We pay $900 a ton, adjusted for grade and some other minor things. So prices go up, we obviously, it's direct to the bottom line. And so that's very exciting for us.
Keith, as we wrap up, 2023 was a transformational year. Piedmont became a producer, and you also released your first ever earnings. How are you going to top that in 2024?
That's great question. I think the NAL operation will continue to improve. I think they will, we'll get to nameplate. We'll get to run rate by the middle of next year. I expect to see more drill results announced, and I think you'll see over the course of 2024 some discussion of what those drill results mean in terms of mine life, in terms of mine plan, and what the potential upside of the project is. So that's very exciting. We hope to have financing for Tennessee very much involved over the course of 2024. We hope to see Ghana permitted and in construction in 2024. We hope to see Carolina permitted and moving forward through the rezoning process in 2024. Those are all important catalysts. I think the market, we're a somewhat more difficult company to analyze, and I think many say that the value of our offtake agreement alone represents our market cap, and I think people have discounted assets like Carolina very, very heavily. And that's okay. It provides a lot of upside for us. And I think as we demonstrate success at a place like Carolina and the other projects, I think the market will be able to focus on kind of the broader value proposition within Piedmont.
Well, it sounds like you and your team are going to be very busy in the coming year. And that was a great overview and a great update on Piedmont Lithium. And I want to thank you very much for spending time with us today. And I look forward to the next update.
Thanks a lot, Jimmy. Happy to do it.